Oil daily forecast, December 29th, FXEmpire.com. The light sweet crude contract had a bearish day, as you can see by the red candle here at the end of the chart, on Wednesday. And a couple different things have been kind of playing along as we've been looking at this market. We've suspected, that there could be a downward channel, a bullish flag, or perhaps just straight flat resistance. Well, currently it looks like the flag is out of the picture, although a break higher, of course, would go ahead and reconfirm that. So there are several different things that we can use for analysis at this point. They are conflicting signals, but having said that, the downward channel continues to be the most likely just simply because of a couple different things. Number one, the Iranians were responsible for a lot of this rise over the last couple of days as they threatened to close the Straits of Hormuz. The Saudis have come out and said that they would be more than willing to make up the difference in production if the Iranians do that, so that essentially short circuits anything the Iranians are trying to accomplish, which of course in their interest is the avoidance of an EU sanction on Iranian oils. So having said all of that, the Saudis said that they would be willing to step in and supply the energy. And then, of course, the United States had its own response in the form of an admiral, actually, as opposed to the president or the secretary of state, who said that a move to close the Straits of Hormuz would be a very stupid thing to do. And then he pointed out how easily they could just kind of brush them to the side. When the admirals come out and say something like that, you have to believe that somebody higher up was aware of the fact that he would say something like that, or at least he knows that he's speaking in the same ilk as those people. Having said that, it looks like this crisis could possibly abate. Adding to that, we have low volume, not much going on for the rest of the year, so unless the Iranians do something truly stupid over the next couple of days, we should probably see an alleviation of prices. Looking at Brent, it's a pretty heavy looking contract. You can see that the 110 has come into play again as resistance as we have fallen to do a little bit of an outside bearish candle. The driving season, or the driving totals in the United States over the last 8 months has continued to dwindle, and the United States being such a large consumer of petroleum, that certainly should weigh on the supply and demand ratio in the oil markets. Having said all of that, it appears that oil is trading more along the lines of a headline risk event type market as opposed to anything involving supply and demand. We do think that this market does look a little heavy and that it will drift lower, but don't expect massive moves, at least until the new year.